All right, I'm welcome back for the episode of This Week in Charts via Carnivore Trades and Wall Street for Main Street. If you've not done so already, please give the video a thumbs up, like, comment, subscribe to the channel. Come find Jason on Patreon. Come find me on carnivoretrades.com for swing trading alerts, analysis, and live day trading. Anyways, let's get into it this week here. So markets did pull back, but we are going to achieve a soft landing. So that is now pretty much in the books, and we'll talk here about how that is going to happen in this video. Oh, hold on a second. That's just Janet Yellen talking about it. Never mind. Anyways, let's get into the charts this week here. So Janet Yellen thinks we're going to have a soft landing, but you can actually take a look here for yourselves. It's a couple of things we can look at here to deviate from the norm a little bit. You know, Bloomberg articles here kind of upticking in the soft landing narrative. It's percent of articles of the monthly total, and you're going to see the shaded areas are recessions there. So 2000, 2008, coming into that kind of period, even in the recession of 90, you had those articles coming in. So this is kind of what happens. You get the consensus view. Janet Yellen is now on board. But, there's plenty of other data previously that we can look at as well. And this, we've talked about this stuff before here, but rate cuts, you get kind of that Fed pause rally. We've had that for the most part this year. As soon as the market started to sniff out rate cuts back in October, November, we've rallied up pretty sharply. And again, shaded areas, recession, kind of, you get the rally up into that. And then when the pause comes, it's usually kind of a stalling point. Another chart we can look at here is the Fed funds versus the unemployment rate, and kind of when you get that stall out in Fed funds, unemployment rate seems to uptick not too far after that. So again, data does point to a recession this year. Who knows though? Maybe we will have a soft landing. Maybe we'll avoid the worst. Maybe history won't repeat. But in any case, markets here this week did pull back, and we've talked about this. Heck, we talked about it in the year-end review video, and I said, look, the markets here really need to pull back. Otherwise, I think we'd be at risk of some type of Volmageddon, right? If you go straight up without any pullbacks for long enough, you're going to have a very, very sharp decline like this, right? It can happen, and so we are pulling back here, and so that is at least in the near term, a healthy thing here for the spiders. For those of you who follow the SPX, which I typically do, again, you're going to see there's still a lot of support right here in this 4600, 4650 kind of area. If we take a look at the daily, that was the pivot going back to March of 2022, and we broke above that. We had the pivot here, we couldn't get above it, and we consolidated and broke above. So even if we were to pull back a little bit more, this would be a lot of support in this range. I do think the markets will probably likely put in some type of a low, and I think we'll get some type of a January effect rally, kind of going into the end of the month, and then we'll kind of see from there here. But markets right now, they are working off that overbought condition, which they need to do. I believe I read somewhere yesterday the triple Qs, don't quote me on it, but I believe they've never had more than 5 down days in a row since I think 2002 or 2001, which we did manage to scratch out a 47-cent gain on the triple Qs, and then the composite did manage to scratch out a 13 point gain. So we did manage to scratch out a gain, a green candle on Friday, even though we did have a pretty good pullback to start the year. One of the worst, I believe the worst start to a year for the S&P since 2008. So, I just showed you those charts there about the, recession talk. So maybe a little ominous there, but the worst 3 days at least start to the year since 2008. That said, though, I'm not in the camp that we're going to just melt down right now. I do think we'll probably get some type of a low here in the next week or so, maybe the next couple of days even, and then you'll get some type of retrace. The retrace will tell us more. Does this retrace fail? Halfway? Do we get down here? Do we retrace 50% of it, and then do we have another leg down into the 46 handle, 45.50 area, or do they challenge that all-time high? Right? Again, we got very close to it And it would almost be unusual if we didn't at least pierce it by a little bit. So again, I'm not saying it can't happen. But the high could be in, and we could just melt down for the year. That's certainly a possibility. We could have recession and things of that nature. But I think they'd likely at least want to challenge that. But again, we'll use the charts as our guide. And right now, there's still a lot of support around the 4650 handle. So even if we do test that, I do think you get a sizable, at least tradable bounce off of that level for now, and then we'll evaluate the markets kind of as we get closer to the end of the month. The triple Qs, again, you're going to see the same kind of deal. So right around this 393 area, you got that previous 52-week high, this little base right here. So again, 387, all this area here, 387 to 393, 394. There's a lot of support. If we were to pull back into that, without consolidating, you got the 50 MA. I would think you'd likely get some type of pop off of that. We talked about this last week as well. Possible scenario: Qs have kind of come in more sharply off the highs. The Magnificent Seven has seen a lot of money flow out. Right, it looks like money was waiting until the new tax season to take profits on those names. Does the Qs repeat again? Pivot high on July 19th. Spiders, pivot high on July 19th, higher high. Qs, lower high. And again, if we go back to November 2021, Qs topped out in late November. Spiders didn't top out until January. So do we get a scenario where the spiders come up and pierce the all-time high, where the triple Qs, maybe come down and then just stall out around 409, 410. It's certainly possible. I wouldn't rule that out. Again, none of that has to happen. Just something to keep an eye on moving forward. But bottom line, I believe we'll have maybe a little bit more of a continued pullback. And then I do think we'll get a January effect. We've been up too much last year for dip buyers not to at least show up here and attempt a dip buy. So that is kind of what I've got penciled in right now. Of course, if that changes, I'll let you guys know. But that's kind of what I'm looking at here moving forward into next week. Russell 2000 had a pretty good pullback as well. Again, went essentially parabolic on the daily. And that 205 handle that I showed you guys is held up really well. So that acted as resistance. If we do inch back up, 210 is kind of the max move right now. So that's really what I'm looking at. On the downside, you do have some daily support here at 187.50. Maybe even get a bounce. You might be due for a bounce right now. You've had several down days, 1, 2, 3, 4, 5, 6 in a row. So you might even get a bounce Monday, Tuesday. But daily chart support, there's still a lot at 187.50 if we continue to pull back there. The Dow here, I think, is starting to get a very top heavy. So you can see we went parabolic. This is definitely parabolic, and we do all-time highs. And take a look here. You're starting to get a little divergent, right? We had that reversal candle, made a slight new high, and it's almost got that kind of rolling, kind of rounded top look. So I'm thinking the Dow is starting to lose momentum here. And, we get back below this area here, that 370 handle. You got a little daily chart support here, but there's really not much going back down to 355. So we could see a pretty good correction there for the diamond if we cannot hold this 370 handle, which was, again, kind of, your previous all-time high. You could make a case of failed breakout. You got to go all the way back down. Look at how extended you are from that weekly 20 MA, right? So I know everybody's hyper-focused on the daily chart, but you got to look at those bigger time frames as well. And it's been a while since we've been this extended, really, from that 20 moving average. I think we got to go back to, you got to go back down to here where the October low was, and then really it wasn't until the COVID crash that we were this extended from the 20 MA on the weekly. So just be aware of that. Dow looking a little top heavy here. Again, it's not a death sentence yet, but something to keep on your radar. SMH here. Again, pulling back like everything else, hit the 165 handle. We'll see if that can get a bounce off of that. If not, there's still a lot of support at 156 and even another level around 160 for those of you who follow the stocks. We talked about that 39 handle, and we got a nice bounce off of that. So we'll see if that can come up. If it does, I would think this puts in a lower high. I do think these need to test lower prices here. So I think the semis are likely to have a lower high than maybe than the spiders or some other sectors. We've had a pretty good decline off that. You wiped out this pivot pretty easily. So I could see maybe a bounce getting to 4,100, but I think that would lead to possibly a zigzag down, maybe into the 37 handle. So just be aware of that. Semis definitely coming in pretty sharply here. And it's not a good sign for the market, not a good sign for tech when that happens. But they are due for a bounce. They did get a little bid off of that support, and we'll see if they can pop back up this week. All right, so IGV finally coming back in, right? So we've been talking about this one for a while, and we got a little daily support here at 382.70. There's your gap fill, 50 MA, not far below that, and a lot more around 367, 370. But I've been saying for a while this needs to do weekly consolidation in this area, and it's finally doing that. So let me just move this back up to that 410 area. There you go. So those weekly pivots, big weekly zone, and it ran really hard without consolidating, and now it's finally doing that. But IGV finally pulling back here, and again, daily support here at 382 and change, 50 MA, and then below that, bigger support around 367 to 370. Dow Transports did take a little bit of a slice this week. This is still not broken, though. There is a ton of support at 15.2, but definitely a weaker sign to see that break back below 16.200, 16.3, and then you kind of got a back test. So this may have a little bit of work to do, but what I do like out of the transports is the jets, and that's a big component. So take a look at what we did. So Wednesday, the whole market got whacked really hard, including the jets, and Thursday, Friday recovered very nicely. So this pattern here is not broken. This can still get up into the 20, 50 handle. If that happens, I think that would certainly bring upward pressure on the transports. And again, this pattern is still valid, the inverse head and shoulder. It's got a long way to go. I don't know if the market's going to hold up that long for it to play out. But right now, the transports are not broken, and they still can have another push up here. But they definitely did come back in this week. All right, let's get over here to interest rates. So let's get back over here. And by the way, as of Friday's non-farm payroll report, the odds and ADP came in way hotter than expected. So private sector and NFP coming in hotter than expected. Odds of March rate cut dip from 62 to 56. So it's basically down to a coin flip now. And you guys know I've talked about this. I don't think rates are going that much lower. And I've been on that train for a while. They could still get down to that 370 handle. That may coincide. Again, what have I talked about here? Possible January effect rally. Maybe yields come back into these lower levels here, 10s and 30s, to that yellow line, 5s, 2. Maybe the 2 could pierce. I think the 2 may have bottomed, but the point is, you could get a little bit more downside here. Maybe that coincides with the January effect rally, but that's really it. That's all I'm seeing, and I think the market was really surprised by that jobs number. And I think inflation's going as low as some people think. By the way, take a look at the yield curves here. 2s and 10s. Maybe a little bear steepener there. 3-month and 10 years still way off. But just something else to keep an eye on there. But that long end, I don't really see much more downside for that. And again, we'll take that one day at a time there. But I think yields are going to surprise people a lot in the first quarter. Anyways, XHB here this week, very resilient. So we did close below that green bar, that breakup bar, by a few pennies, but it was right back up on Friday. This sector is just so strong. It's so hard to take this down. Eventually, I think this will have a pretty steep correction, but again, it's very strong on the charts right now, and I would not really fight the trend until the market gives you a signal, which I don't think we're quite there yet. Again, there's a lot of sectors still holding up, even in this pullback here for the spiders, which tells me it's just a routine pullback and nothing more. But right now, 86.50 is support for the XHB. For the VNQ, that did pull back like everything else here, but nothing terrible here. You can make a case it's just a pullback pattern. There's still some daily support at 84, and a lot more around $80. XLF, very, very strong. Again, this should still get to 38.25. These banks, they do have earnings coming up. Be careful. They're running up into earnings. You can see JPM right here. That is into a double top. Be careful with this. If you own it, trail your stop on that. But Wells Fargo, Bank of America, Goldman, Morgan Stanley, these are all very strong right now. Yes, they are overbought going into earnings, so that is kind of a red flag. But they're very strong here, and that tells me here again that this pullback here can still go higher in the spider. So when you see rotation to financials, it's not a bad sign. That doesn't mean they can't, sell the news on earnings, but just something to keep in mind there. KRE, that can still get to 56 potentially. KBE can still get to 48 and a quarter. Broker dealers still holding up really well above all the moving averages, but just be aware again, it's had a very big run and needs to correct. At some point, 520 would be a level, and then below that 510. All right, so let's get over to commodities here. So crude had a decent week. So we started off on the weaker side. We rallied up and then came all the way back down, up Wednesday, down Thursday, and then right back up Friday. You could make a case you have a little minor wedge here. So this down-sloping trend line with this up-sloping trend line, I think crude's going to 80. So that's kind of my assumption right now. We put in a higher low there. I think that the low is likely in here. So I'm going to give the upside bias to crude to 80 bucks. I'm not playing it unless I see some type of a pattern that makes me like it, some type of bull flag or something. But right now, that is kind of my bias right now is crude to 80. And again, that does coincide, right, with a possible move up in yields. So they tend to trade positively correlated, and that could be a thing going up into the first quarter. XLE was definitely on the weaker side, though. We did finish the week green, but we rejected really hard at 87. So pretty good reversal on Thursday. Managed to close fractionally higher on Friday. I'm not doing anything with these until I see more of a pattern or a correction. There's just nothing to do with them right now. I don't like the charts on these producers or the explorations. I like the weekly and monthly on the OIH, but I still think that's vulnerable down to 280. If that gets down there, I would definitely be a buyer. But energy here is a little tricky right now from the producer side, but I do think crude gets to 80 there. CCJ here managed to close. So take a look. So we did close below that breakup bar low. So the low was 42.51. We closed the week at 42.25, but we still closed. It looks like we closed a few pennies above that high, and the trend is up, right? So you're still above all the moving averages. So we're going to give it the benefit of the doubt. It is still monthly it is still monthly overbought, so it does need to pull back here at some point. But again, it's still strong on the chart, so we'll leave it at that there. And you guys know URNM is still strong as well, so I have no problems with that. All right, nat gas surprised to the upside this week. So we talked about this bullish pattern here, and that has played out. Gap up Monday, or Tuesday rather, and then we just powered up. Even Friday, take a look here. It sold all the way off to the low of Wednesday and then rallied all the way back up, made a new high, closed above all the moving averages. So this should get back to 3, maybe even a pierce of 3. And if it can get above that, you've got a level here around 350, and then it's really up to 4. But pretty impressive reversal there for Natty. Again, this is also positively correlated with yields to an extent. And at least from what I've noticed, and this is the weekly, ever since we put in that nice tail on volume and talked about possible capitulation there, looks like it was because that was the low, and now it's heading back up. So again, we'll see if yields continue to give this a lift here, and commodities in general. Speaking of, I'm still in wheat personally, and we had a little pullback this week, but we tested the low here, and we came right back off on Thursday. Take a look here. This is just the charts doing their thing. 650 down to 600, 640 down to 590. Perfect measured move, little zigzag correction. But take a look at the weekly bullish inside bar. That's getting ready to go. So I do like wheat very much here, and that is not changed at all. All right, so let's get over here to the DXY. So the dollar's been a tough trade here. You're gonna notice I put in this channel, and we had a little rally up. Big fat doji on Friday after the non-farm payroll and ISM, which ISM came in really, it came in colder than expected, which kind of clashed with the non-farm payroll. So you had a doji, essentially equal buyers to sellers. My guess is the dollar, again, it's just my guess here. I think the dollar pulls back here into that midline. And then I think you could get a higher low there. And then I think the dollar maybe gets up to 104, 104.50. That's kind of what I've got penciled in right now. We'll see. That's just kind of my assumption. Well, the dollar's been a tough trade here. But this pattern's not terrible for a zigzag. Keep in mind these down sloping channels like this with price a down sloping channel, like in an uptrend like that, it generally is going to break bull, right? So uh, uh, when the lower trend line here is down versus, you know, price kind of going up, price is inside like this, it usually breaks down, and this usually breaks up. So just keep that in mind. That's kind of why I'm assuming we might pull back here, or even flag and then push up to the 104, 104.50 handle. But dollar holding up, and again, we'll leave it at that. There was some, you know, quote unquote, reignited fears of Middle East, you know, stuff that I think it's all nonsense. We've had those fears for 2 months. It just, the market cares now because it's time to sell and take profits. But the financial media needs an excuse for everything. But anyways, gold here is still holding up. It did pull back. Put in a little doji there, just like the dollar. Again, perfectly inverse for the most part. The gold chart is still holding up really well. Again, my guess, though, is that I think yields put pressure on PMs into Q1, and I think that leaves us with a good buying opportunity. But right now, gold's holding up, and the weekly is still very strong. If we do pull back, I mean, there's still a good amount of support around 1960 in that area. So again, we'll take a look at it if and when it gets there. But right now, gold's just consolidating, and I don't really see any problems. Silver definitely came in on the weaker side, though. We did kind of slice this little trend line. You know, I've heard some people make a case like, oh, this is a head and shoulders. I mean, it's a little steep for me. I don't really like it when it's that steep. But if this does play out and to target, just buy everything you can. So if it gets down there, I would buy everything you can. Physical as well. But, you know, it started to play out here. We did slice the trend line for what it's worth. There's still a lot of support at 22 if it gets there on the daily. So we'll evaluate it, but it is backing off. And again, I talked about this, like there's a lot of supply in this candle. Don't fight it. And right now we're working on, you know, we're almost about to make a lower low there. So if that happens, we probably will go test 22. So again, just, you know, be patient with this, and you know, if you want to keep accumulating it here, I've got no problem with it. Platinum did pull back as well. We talked about that. That needed to do so. And, you know, 950, 960, we did get a little bit up on Friday. We held the 20 moving average. We held the 200. So we'll see if that can put in a higher low there. You know, even if it goes down a little bit further, I think, you know, every dip is a buy essentially. You know, could it go to 920? It's certainly possible, but I think the lows here are in. You know, maybe it does a little zigzag down. I could see that. But I think the lows are in here for platinum. Palladium did pull back pretty sharply as well. Remember how thin this is, though? So it does kind of overshoot, right? It overshoots to the upside and overshoots to the downside. Just be aware of that. I still think the lows are in for this. I wouldn't rule out at this point maybe a spike of double bottom. Often that happens, and then you can get that W pattern. So it's something to keep an eye on there. But I do think the lows are in on palladium, and I do think this is something you want to be accumulating. Copper here had a little minor breakdown this week, so this kind of this little trend line here. If it can hold these moving averages though, and you know, hold this kind of 375 area, you still could get up into the low fours. After that, you know, I still think this is vulnerable down to kind of the low threes, at which point it would be a buying opportunity as well. So nothing really changing there on the copper front. Anyways, Bitcoin here still holding up relatively well. Let me get rid of this. You know, I kind of tweeted about this earlier this week. I think this has a lot less. Everybody's talking about the ETF, but I think this has a lot less to do with the ETF and a lot more with emerging market inflation and people trying to move their money out of those currencies. But so I know everybody's like, oh, as soon as the ETF approved, Bitcoin's going to do this. As soon as the ETF is approved, Bitcoin's going to do that. Even I've said that. I'm starting to think now that it might even be a nothing burger. Honestly, I think the real move might be, you know, due to this emerging market inflation. So we'll see what happens. I'm not saying that we won't get a reaction on the ETF news, which should be soon, but I'm starting to get the sense that there's something bigger going on here. By the way, you're going to look at this chart pattern here, even with these little slices here, these little flash crashes. Just zoom out. Weekly is still very strong, right? That's a bullish inside bar, and there's no real problems here. Same thing with ETH. You know, the one I like right now is Cardano, so that is acting well. Still got a bullish inside bar there. I believe even, yeah, Polkadot even kind of climbing up. So again, zoom out here and you're going to see that Bitcoin can still get up to the 48, maybe 50,000. And until it really starts to break these lows here and does technical damage, I don't see any problems here on the charts with most of the cryptos. All right, so anyways, let's quick get back over to the S&P. Again, I think we're likely maybe going to decline possibly into early next week, and then I think we'll get some type of a January effect rally. Does that result in a lower high or a higher high? That remains to be seen, but that's kind of what I've got penciled in right now. Just be careful this year, though. You know, I think we will start to slip into recession. We'll find out at some point that we've been in recession for a while. That's kind of how it works. But just be careful of this whole soft landing and rate cut narrative. There's a lot of noise out there, and again, you just want to let the charts dictate what we need to do moving forward. Anyways, guys, going to wrap it up here. You guys take care. Come find Jason on Patreon. Come find me on carnivaltrades.com. Talk to you guys all next week.